Good morning, sunshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with free air. There's no second best, okay?
GM. Friday, 30th of August. Trade of the day. So, like I mentioned, a few paths here you can see. And then I want to overlay this with, obviously these are not drawn to time scale. Like this move could happen all today. This dump could happen all today, or it could take time. Just more looking at the different areas where I'm interested. I think that breaking below this level, right, getting down into there probably leads to lower prices. Getting above here is where you want to watch out, because if it's going to be a further sideways correction, it's going to have like this, the false breakout, and so on. And then from a higher time frame perspective, if I actually zoom out again, and we get a clean chart, you have to also be mindful of, that's not a clean chart, you have to also be mindful, that's not one either, it's this one I drew in here anyway. It's like this white path is something that I'm really watching for, because if I just take, do I need this? No, I don't need this. Get rid of all that. If we're looking at the 4-hour chart, a little bit similar to this over here, where you have the move up and you have the breakouts that are coming all the way back, and then a breakout that comes all the way back. That's more of a distributive sign. So we had a move, we had a high that was set, we had a breakout that failed, came all the way back. Worth watching if Bitcoin moves to the highs again and does the same thing and comes back. This is where your real, next leg down will come from. So you have to watch and see, are we doing the same thing, right? Or are we showing breakout retest? Because what you want to see, like I mentioned, is the way you want to see it move is it moves up, it consolidates, it breaks out, and the retest holds at the breakout point, and it breaks out, and the retest holds at the breakout point. This is classic trending structure. That's what strong trends look like. That's what this one wasn't. The breakouts kept coming back below, and this one so far is the same thing. So if it doesn't go for a new high, if it moves up and consolidates and holds there, that's actually really good, because then it gives better chance for the next breakout to actually hold and go higher. If you see it move up quickly to the highs and comes back, that's when you're looking at these kind of more distributive structures, right? So that's something to watch. But let's zoom it in and let's focus on today's core PCE, which is going to happen at 12:30 UTC. That is the inflation number, which is coming today, and we have some gaps above, right? So we've got a breakdown point that was untested from yesterday, and we obviously have the breakdown from Tuesday, which is also untested, so all the way up into that area. Just drawing rough zones, the gaps are clear. You have a gap here, and you've got the rest of this gap, which shows we filled part of it yesterday. So these are inefficiencies that need to be tested. So what you want to see is, if price tests those inefficiencies and then gets back above them, that's a clear sign that it's building through the range, right? So that's like the best structure you can see. Do expect, if we push into them, do expect it to sell off, right? Expect that when it hits these levels, it will sell off. When it hits that level, it will sell off. What happens after is if it starts to build back through, that's when you're going to see a better chance of a move higher. And you can see this over here. We have these moves up, a full retrace, but it builds back into it, move up, full retrace, builds back into it, then it breaks out. So if the market's going to build higher and higher and higher, you should see it move more in a grinding upwards fashion. And if we start to flip and get above 62 and a half, that's when higher prices are coming. But for today, I'm going to trade this the same way. So I'll be in day trader chat trading the core PCE. We'll trade it with the same method where I wait for the number to come out. I don't care what the number is. That doesn't matter to me in terms of trading it. The only thing that matters is positions that build after it. Obviously, if inflation rises, it will probably give the market a little panic, because the Fed are talking about, okay, let's go. We need to now go into a rate cutting cycle. And if you see a significant increase in inflation, that might tamper down the expectations. But It would take a lot because at this point rate cuts are fully priced in, and Powell has literally said we are ready for rate cuts. So, you know, core PCE 0.2, but then the yearly PCE. So where is the... Here we go. Inflation shouldn't swing the Fed easing debate. Well, I'm not going to watch the fucking video, but... inflation gauges and strategies drop. PCE inflation. Let's see, just see if there's actually just an article about it. Because I want to see the yearly number. Core PCE has come down as low as 2.6, I think it was, from last month. Yeah, 2.6 in June, and it stayed there in July. Headline is forecast to have held at 2.5. So those are the numbers you're looking at. You're looking at sort of 2.5, 2.6 for the headline number. And then the month over month is 0.2. So core PC price index, yeah. So anything sort of in the 2.4, 2.3, 2.2, like any drop is going to produce a significant move. If you actually see a significant drop, like at or below expectations, that will definitely have a positive impact on price initially. Now remember, that does not mean that you just get in fucking long and chase the trade. Don't try and trade the number releasing, because you're not faster than the high frequency trading algorithms, which have this news and have it tracked and get in immediately upon happening, and then they're immediately selling it back to you. The best way is to allow the market to make its move. Going into this, you're probably going to see the market not move, right? So the market tends to lose volatility right before a big event, big data. When the data comes, you see volatility, and after that, you see new positions build. And if it starts to build like that, right? So if you get to spike up, spike down, or whatever, and then you start to see price building through, especially if you've got a good number, that's when you're looking at, okay, cool, now we're probably heading for here. Traders will come in and build new positions after that number. If the number is good, there's probably more of an expectation that the market will continue higher. If the number's bad, you'll probably see that reflected in the data, where instead of going higher like this, it probably drops lower. And watch where it goes in the hours following. And if it starts to trend lower, you're going to see it break down. If it starts to trend higher, we have our target above. Our target from yesterday. So the volatility will come. Don't open positions before it, because nobody else is opening. So why would you? Allow the volatility to happen. I've talked about this before. The spreads widen out. Let that all happen. And then afterwards, you want to set up your positions and trade them. Where do we have gaps? Because this is where you're looking at, like, when the actual news comes, to take off all this, when the actual number drops, where do we have untested areas? Like, there's an untested area from here, just from this morning, where prices pushed up, that it could easily wick back down into. Obviously, you'd have stops below there as well. There's not a whole lot below. It's a pretty solid support so far. I would expect at least initially, if there was a wick down into this area during the event itself, I think that low should hold. And then above, clearly, you've got several areas. There's an untested level. Here's an untested level. If we're just looking at the exact gaps, where the gaps begin, and there's an untested one up there. And obviously there's a bunch more, but you've got plenty of inefficiencies above. Below us, there's inefficiencies all the way down, I think. Moving up, that's pretty efficient. Moving back, it's not too bad, even as low as a 15-minute chart. Yeah, you're really looking all the way back to here, from back at the start of August, where we had a move up that was not retested yet. And again, these don't have to be, but if the market starts to move towards them, that's where it will seek to fill. They moved up, but they're all mostly retested. That level, there's one that wasn't retested. It front ran a couple of times. And then you look lower, and we see this main impulse from all the way back when we had that really bullish New York session after the bearish sell-off. So there's some of your levels above and below. The levels below are significantly below. So I would say, like, we're not going to hit those based on this PCE number. But PCE could be the catalyst to break some of that structure down, and then you see price failing to get higher, and then it's going to go for those levels. But also, same thing applies on the upside. So I would not have too much in my mind for path predictions until that number comes out. Once it comes out, give it 15 minutes initially, give it a couple hours, watch the New York session. We are on Friday, Don't expect a huge move to happen into the weekend unless there's some significant shock number. Next week's probably more when you see it. Don't forget as well, we're near the end of the month. Traders don't tend to take on positions going into the end of the month. And after we see Friday session develop, be better set up for going into next week and also next month. So that's it. GM. I'll be in day trader chat and trading analysis talking about this as it happens. GM.